Welcome back to Coincheck. I'm Abhishek and you're watching T.O TV. Today we are digging into Camp Network, the new IP first layer 1 that just launched Mainnet, and it's pitching itself as the infrastructure to monetize creator IP for AI. The token has popped up at token generation event and the narrative is out. But what's real, what's risky, and where do trade levels set? Let's break it down for you guys. So let's quickly look at the market snapshot. The price is at $0.095. It's ranked 334 by market cap. The market cap currently sits at $200 million. If we look at the circulating supply of tokens, it is 2.1 billion CAMP tokens. When we compare market cap to fully diluted value, the fully diluted value is $950 million, or a total supply of 10 billion CAMP tokens. Only 2 billion tokens out of 10 billion are circulating right now. And if we look at the momentum, it almost peaked up to 300% from the current prices. That was the high it made, but that was because of volatility and launch spikes that we see. So the Mainnet launch and token generation event liquidity produced massive volatility and immediate on-chain activity. So what exactly is CAMP? CAMP is a purpose-built layer 1 for IP provenance plus AI agent monetization. Think of it as an IP registry plus agent runtime. Creators can essentially register music, art, datasets or other IP. They can also record provenance or rights and license that content programmatically to AI agents or apps. So imagine you're a creator, you make some art and you can now ask an AI agent which can automatically run these things and do the buying, selling, everything for you. So CAMP, and what is the token CAMP? It's a gas token for the CAMP blockchain. It is also used for governance and it is the economic unit for licensing and royalties. So what's the core idea? It's like turn IP into on-chain licensable assets with automated royalty flow, so AI agents can legally train and pay for content. Creators get paid, datasets become licensed, and models get higher quality training data. So let's leave the technical aside. Why has it been surging? What's the news around the recent launch? So number one, we've seen Mainnet Live launch is executed, immediate liquidity and listings. MEXC day one, Bybit futures are also announced. That converted story into tradable market action. Number two, we've seen IP for AI thesis. CAMP positions itself as a protocol that makes content licensable at scale, valuable if studios, publisher and AI teams adopt it. We've seen institutional backing. They had a Series A round of $30 million led by 1KX, Blockchain Capital and OKX Ventures. It provides credibility and distribution muscle. If we see the testnet statistics that happened before the mainnet, it had 80 million plus transactions and we had 1.5 million minted IP assets on testnet. That produced DDNS and not just vaporware, it's actual transactions that happen on testnet. Supply dynamics are also good and something to be careful of. It's only 2.1 billion out of 10 billion tokens are circulating at token generation, which happened yesterday. It has a low initial float, so it helps the price go higher, but it also increases vulnerability to concentrated moves and token unlocks. We've seen on-chain activity, massive volume, volatility on token generation window, and high early TVL volume created real fee flow and on-chain signals to monitor. Claims are done, swaps are done, big wallet flows are also, we've seen that as well. Then it was an immediate liquidity event, the airdrop mechanics. A lot of people who got the token airdrop, they were given 20% unlocked at token generation event, and the remaining tokens are kept to vest over a period of time. So when these vest get unlocked in the future, that could also create a short-term sell pressure, but it also gives user distribution. So that is something you should be looking out for. And then the main reason why CAMP has been performing good and it's been highly valued is because of the competitor, which is Story Protocol and other IP chains. Story Protocol sits at $6 billion fully diluted value. CAMP's execution plus partnership will determine whether it's an infra winner or just another L1 launch pop. So let's come to the easier part. What's the trade that you can take? Number one, note that it's an extremely event-driven and volatile trade. So trade sizing must be small. Take a small trade for this. The entry sets at 0.065 to 0.095. The current price sits inside the entry zone. The stop loss is at $0.045. So we've got three targets. Number one, we've got $0.16 as target one. Then we've got $0.24 and then we've got $0.4 as you can see on the screen. So use a tight size for this trade. Watch on-chain claim windows for the airdrop, and if a major CX listing or studio announcement has reevaluate stops and sizing. So what's the verdict? So CAMP is a high beta infrastructure bet. It has a real product focus. We've seen IP, provenance plus agent tooling. Then it also has institutional capital and we saw good testnet transaction. These are all the boxes you want checked for a genuine narrative. But token generation event dynamics, low initial float, and NFT airdrop claim schedules mean short-term volatility will be XD. If you trade microcaps, CAMP is a story to watch. Small size entries, clear stops, and confirmation via partnership listings are the safest route. So it's a new token which launched yesterday and it would be very volatile to trade this. Be very careful and use very small positions. So remember, this is not financial advice. Please do your own research and consult your financial advisor before taking any trades. So that's it for today's Coincheck. Thank you for watching thesis TV. Subscribe to our YouTube channel to be updated with the latest news and developments happening in the Web3 space. I'll see you guys again on Monday and goodbye for now.